Hi all, this is Zavier, a real estate agent from PropNext. It's good to be back again. It's been a hectic last quarter and this quarter. You've been following the news, you know that the sales for all the major launches have been doing very well. First day itself, usually 80 to 90% sold. So today's sharing objective will be giving you a quick update on the market, what's underpinning this demand, and how you should position yourself looking ahead into 2026. All right, without further ado, you can look at this chart over here, showing you the new launch overall volume and prices. The new launch market, firstly, the new launch market in general, I feel it always gives you the general market sentiments and where the market is heading, because this is what I call the primary market. It's where developers do their main business. And I'll say most of their decisions, it's no emotion, it's based on market sentiments, it's based on business sentiments, and it's usually the driving, indicator of where the property market is heading. All right, so the bar chart stands for the volume, the line chart stands for the pricing in per square feet. If you look at 2025 itself, you can see we crossed the psychological 10,000 volume mark. That's quite substantial if you look compared to the 7,300 units sold in 2024. That's a substantial increase. Together with the increase in prices from 2003 per square foot to 2004 per square foot, I would say the market is really bullish over here. And you can track back all the way to 2020 or even in 2015, before it stagnated. It's been going up all the way in the last 10 years. The circuit part shows some slowdown in prices. Obviously, the first one over here would be the COVID. But because the dip is probably around 2 quarters or so, but overall the market actually bounced back towards the end of the year. Therefore, the prices actually stayed constant from 2019 to 2020. Now, moving on to 2023 to 2024, I think it's a market whereby people were thinking, whether these prices are sustainable. And also when the interest rate actually went up, the Fed decided to increase the interest rates, and we see our stress test increasing so much, our interest rate rising up to 4%, right? That's when the sentiments were a bit slower together, I would say, with some geopolitical risk, the trade war, a bit of recessionary risk in the US, I would say the Western economies. By the end of everything, I think we still came out unscattered and relatively strong with the uptrend still maintaining. All right. And the 10,000 mark, I'll say it is very significant also because if you know right now, most of the buyers are actually locals. So if you leave out the foreigners, which are being charged at 60% for the ABSD, 10,000, more than 10,000, and I feel by the end of the year, because this 10,000 figure doesn't include sales in Penrith, Zion, and Faber, and also the last one, the Sand, together with all the existing launches that are still selling, I believe we should cross 12,000. So this is substantial, with most locals and PRs that are buying. And of course, it crossed the average volume over the years at 10,800 units. All right, so definitely a sign of bullishness as we come towards the end of the year. And I feel this trend will actually move into 2026. All right, looking into the next slide over here, just 3 slides, okay, just to give you really a quick update, a very solid summary of what's happening in the market. Of course, for more details, you can reach out to me. My numbers are at the slides, and you can just private message me too. All right, so why do I put this in a triangle over here? Is to show you what is structural and what is cyclical. Obviously, coming from the bottom of the base of the triangle, the pyramid would be something that's structural and meaning something that's fixed and don't really change as often. As we move towards the top, it's something that maybe comes and goes depending on the season and depending on the economy. All right. So looking at the bottom, of course, we start with having a very strong fundamentals domestically in Singapore itself and also in the region. I won't be showing you charts and news and things like that. I'll be just talking you through. But I think this one has been talked a lot. And if you followed the news, you will know that the residential household population has grown quite substantially. Overall population has grown. That would generally means more demand. Of course, the household income has also grown quite significantly, especially the top 20% income, right? And you're also looking at a substantial amount of savings throughout and assets much more than liabilities overall. So you have banks that are overflowing with cash. If you follow some of the news right now, they don't know what to do with the cash. They're actually loaning back the money to MAS because there's just too much liquidity around. All right, and that together with our regional growth, which is still very strong because of the younger population over here, because of the Asian economy, whether it's China, whether it's India, whether it's our Southeast Asian economy, they are still driving the growth in general. All right, we are taking advantage of that because it's being a hub, being a headquarters in this region and attracting the best. So the fundamentals are definitely very strong, and that's kind of underpins the strong property market, indirectly or directly. Okay, the second tier over here are talking about the robust and prudent regulatory framework, right? Like it or not, I've been saying this actually, the ABSD, the financial side, the total debt servicing ratio, everything has helped the economy since 2013. Not the economy, what I mean, the property market, in building something that is very strong and prudent. All right, you have purchasers that cannot really speculate. They must be someone that can afford to buy the property before they buy it. Whether you're talking about the loan to value of just 75% for the first property, having a 25% down payment, which is quite substantial. If you turn it another way to look at it, all right, the property market must tank by more than 25% on the very next day for them to have a margin call, right? So the odds are actually very low. And then you have total debt servicing ratio that started at 60% and then reducing to 55%. So the amount of money they can borrow is also much lesser as compared to the income that they are getting. All right, so this together with the ABSD, right, it's really creating a very, very strong and stable property market. All right, and I mean, if you compare with some other countries that go through peak and trough in their property cycle, it's just very, very volatile because they don't have this kind of framework in place. And I want to point out that having different property types in the market also helps to stabilize the entire property market. What do I mean by that? Sorry, is the HDB on the bottom, right? The public housing forming the base, and then from there, those people that upgrade into the private market and then the lender market. So you have different segments allowing for different people to own property and at the same time for them to upgrade when they are able to do so. So this is also a very sound regulatory framework in general that I will say Singapore is able to benefit from. All right. The third point over here is I think something that that it's very good over the years. I'll say especially after COVID, is Singapore becoming more and more as a safe haven. Right. We actually shown the world that we are actually the better ones out of everything in terms of managing crisis, managing money, managing things in general, having just very sound policies in time of crisis. So we have blue collar workers all the way to the top management level, all queuing up to enter Singapore to work, and it's just whether we want to open the tap or close the tap, right? And it's not just that, money also has been flowing in, not just in Singapore property, but also in our stock market, and also in the investment side of things, having a lot of family offices, right? People see Singapore as a safe haven, and at the same time, our currency is a reflective of that as being one of the strongest around the world in the last 5 years. That explains our huge spending power when we travel. Okay, now as we moved up, you'll realize that locals are actually spending more, are actually the main one driving the market. That's why I call the organic demand that is very strong, right? You have the upgraders, whether it's from the HDB, or whether people that can just buy private or landed straight away. This is due to the stronger income and of course the savings and the profit from the HDBs allowing them to upgrade. And usually when the organic demand is very strong for the property market in the country, it's a sign of the strength that actually locals can afford and is something that's more long lasting. Okay, the pent up demand kind of explained that the the last few years, we have less than 10,000 units sold volume. So probably some people are still on the sideline and waiting. But maybe now, this year, they have started to take action. And that explains the spike up to more than 10,000 units sold this year. All right. Together is something that's cyclical with the drop in interest rate. Probably we're only in the high interest rate environment for a year or a year and a half, right? Before the interest rate start to drop. I'll say 2025 is where interest rate really came down a lot. But towards the end of 2024, you can see that it's starting to come down. But this year, the drop has been very, very substantial. Whether you're looking at something like the installment or affordability due to the lower stress test interest rates, allowing them to afford a higher loan, right? These are something that is very substantial and something that is very concrete for them to really take action because they can see the numbers for themselves, right? At the same time, on the right, okay, what are the catalysts that are driving people to making the buying decisions, right? You will see that because of the land bids in 2024 that were much lower when sentiments were poorer, right? That allow the developers to price some of the launches, for example, recently Zion, for example, Penry, for example, Sky, all the prices were much lower than the general market in per se because of the low land price that the developers got it in 2024, right? At the same time, purchasers are also looking ahead in 2025 with all the record, looking ahead in 2026 because of the record land bids that were done this year, right? So they are looking in the pricing to be much higher next year. So most of them are taking action this year. All right, so this is the market in a nutshell. I hope it explains. If you want more information to substantiate, please reach out to me. All right. So looking ahead to 2026, I would say we're already moving into the holiday season. Usually, the end of the year and the start of the year are generally more bullish because people are spending more, right? And that will be reflected in the economy. The sentiments usually are stronger. I mean, barring unforeseen circumstances from the macro side of things, I see this trend continuing. And if you do want to look into the property market, I'll definitely advise you to look at it as soon as possible before the developers can start launching it next year. And I definitely see it to be much more expensive given the land prices, and also they are taking stock of the entire market being very bullish. So there are actually very good existing launches in the market right now that you want to take advantage of, which I'll be sharing more in my next few videos. All right, so that's it for today for the market update. Do stay tuned, and if you need more information or just need more customized consult information, do reach out to me. Thank you. Bye bye.